Right. Hello, everyone. Thank you so much for joining us at this Your Overseas Home webinar. My name is Greta Azzopardi, and I'm a property consultant at Your Overseas Home. So today we'll be chatting with Ricardo Jesus from Chase Buchanan about the tax and financial considerations that you should think about when moving to Portugal. So thank you so much for joining us today, whether that's live or watching on demand. This webinar is essentially designed to support your overseas buyers, provide guidance, and give you the opportunity to get your burning answers questioned. So once Ricardo has shared his presentation, then we'll open up the floor to some more questions. And if you have any as we go along, please type your questions in the Q&A area below, and I can ask them on your behalf. So, Ricardo, it'd be great if you could please start by giving us a quick introduction to you and Chase Buchanan before starting your presentation.
Of course, and thank you for the introduction, Greta. I'm actually going to jump right into the presentation because, as you can see in the agenda, I will give a bit of an overview about myself and the company I work for, Chase Buchanan. And you'll be able to get most of the answers that you need from us and what kind of we do to help our clients. And then following that, I will start with the presentation and essentially giving you all the answers you may need to begin thinking about moving to Portugal. And that begins from your first steps as you're moving from the UK to Portugal, what you need to be aware, and then arriving in Portugal and things you need to also do and have in consideration to essentially have peace of mind. And that's kind of what everyone wants when they move into a country like Portugal, is to hopefully have quite a nice, easy time. And that's what we want to help you with. Okay, so moving into the Chase Buchanan. So our company is a private wealth management and with its roots in the UK. As you can see in the middle, we still maintain an FCA regulation. However, after Brexit, and a lot of our clients were in Europe, we needed to also have a license in Europe to assist our European clients. Therefore, we chose Cyprus as our regulators, one of the main regulators in the EU, and it follows very similar what the FCA states. However, as you can see on the left, we are regulated by the SISEC for investment license. Okay. It differs a little bit from the UK, where you need to have two licenses because one is for investments, the other one is for insurance. That's why you see the IDD on the left as well. Okay, but essentially it just mirrors what the FCA says, but we needed to support our clients in Europe. On the right, because as a lot of people do tend to move to Portugal or Spain, but then they usually relocate from Portugal and then to Spain, and they spend a few years in Italy, then in France, and it could be a bit confusing when it comes to the taxes. So we have a team of tax consultants in the Isle of Man that can help provide specific cross-border advice to make sure you don't fall into any issues when it comes to tax, because a lot of countries have different tax issues and tax rules. And on the far right is one of the few companies that have also a US base, where we are regulated by the SEC in the US. We could provide advice and help American clients globally. Okay, it's one of the unique things about us. So moving along, as you can see, these are the offices that we have. We still maintain the UK, and we have a presence in Canada as well, and then some other regions in Europe, such as Portugal, Spain, Belgium, Cyprus, and Malta. These are the countries where we have most of our clients in. That's why we have a physical presence there. But that doesn't mean we cannot advise clients moving to other countries. And all in these branches, we have qualified advisors with a lot of experience to make sure that they understand the rules of each country so that there's no problems for you. Okay. Here's a little bit extra information, but we're really proud of this, is because of the continuing growth of online crime, we develop a partnership with the UK Metro Police to essentially help and prevent online crime, but also to assist our clients, or prospect clients, to make sure that they understand the type of investment scams they are, and they do not fall into these scams that's happen more and more often. So it's something we're really proud. It's the only wealth management company that partners with the UK Metro Police. In terms of our services, okay, it just follows very similar what the normal IFA in the UK does. There's a little huge, I'm not going to go through all this list, but the main thing is financial and tax planning. Okay, we also work with UK and Irish pensions, planning, analysis, and transfer, portfolio reviews, investments, reviews and analysis, and also some retirement and tax planning. Okay. However, the main thing I want to get from today is in terms of the planning we follow with our clients. So no matter what is your objective, especially moving to Portugal, we would look to follow this process, which is step 1 and 2 kind of together. We will look to understand what is your present situation looks like, and then also look to understand what you're looking to achieve over the next few years here in Portugal. Okay, based on these two elements, we would then analyze your financial situation. Okay, what are things that what your financial situation looks like, what are the type of assets that you have, and considering the move to Portugal is how you can improve your situation to be financial safe and also tax efficient here for the next few years here in Portugal. If we can find benefits and value in improving your situation, we then implement the plan. And step 6 is just making sure, and that's where, because we want to create a long-term relationship with our clients, and ideally every quarter, at the end of every quarter, we sit together and review the plan with our clients, so we can make sure that the objectives and goals that we establish on step 2, that we are taking the right steps to get there. Okay, so that's essentially what we do with every single meeting that we have, is follow this process to essentially get to success on step 2, getting the client's objectives and goals done. So here's the team in Portugal. Okay, we have an office in Vila Moura. We have 6 advisors with more than 100 years of experience across different locations. Okay, we all specialize more now in clients in Portugal, but we have all worked in different countries, so we have experience in a lot of different areas. So no matter where you're coming from, most likely, if I don't have the answers for you, experience, there's someone in the office that assists cover most of the questions that the office asks. Myself, my background is US, because I did all my studies 6 years in the US, got my MBA there as well, and got my UK exams, and I'm a UK qualified advisor, and I specialize in people moving from the UK or moving from the US to Portugal. Okay, so into the actual presentation. So when we look into moving to Portugal, we have to start, first step, which is moving from the UK. Okay, one of the things Portugal has an advantage over other countries in Europe, especially, is there's no wealth tax here in Portugal. Okay, however, with the changes, after Brexit, kind of few things change when it comes to moving to a European country. So without a visa, you are restricted to a 90-day stay. Okay, so you can stay 90 days out of every 180. So if you can only stay 90, then you have to go back for 180, and then you can return again. Okay, so you can use these 90 days to, if you're looking to making a move, to come for a trip, analyze the different locations, because Portugal, even though it's a small country, it differs from north to south. The Algarve may be the place for you, but you may think it's a bit too warm and you prefer the north, and because it's more culture, more things to do, and the weather tends to be a bit more a bit cooler, a bit not as hot in the summer months. Very important is, again, these webinars, as it tends to have very useful information. You should do your research before. The webinars are a bit better than just an internet research because there's quite a lot of misleading information online, so just be careful with that. Also, when you're coming on a trip, look to establish relationships with the right agents, so accountants, lawyers, or financial advisors. One of the advantages that I have in working with us is that we have strategic partnerships with these agents. So if by meeting with us, we can then, if there's something that we cannot help you, it's not our line of work, but it's, for example, a tax declaration, we can pinpoint an accountant that we have a partnership with, so you don't have to, it's less work for you having to find your own accountant. So we can pinpoint a lot of strategic partnerships that we have cover most of your needs. And then lastly is, of course, looking to, if you think Portugal is the country you want to stay, is you need to get your NIF, which is a fiscal number, okay? Since Brexit, you may need a fiscal representative to get your NIF, and your password, it's not easy to get because usually this password gets sent via post to your UK address. So be aware of that. And also to open you need to open a Portuguese bank account, and you may need the NIF, and it may be different if you're a resident or a non-resident. Okay. So, but these are the steps that you should be taking before making the move. When it comes to buying a property, here's the taxes that you may see. So the IMT is a local tax, and it can range from 0 to 8%, okay, depending on the value or where the property is located, okay. You also have stamp duty at 0.8%. Then all the legal fees can go from 1 to 1.5%, the registration, state agent. So consider when you're buying a property that an average purchase taxes are around 6%. So take that in consideration when you're making an offer for a property. That needs to be added as well. Okay, so let's look at the residency visas process. Ideally, one of the things is either you could put your UK property on the market or maybe rent out. Taking consideration when you move to Portugal, you could be changing your main property to Portugal, so you need to consider the capital gains on selling the property, the UK property, so you don't lose the primary relief. Okay. When it comes to the visas, depending on your objectives, there's a type of visa for you. Okay. Mainly, the one that is very used is, of course, the main two ones are the Golden Visa and the D7 visa. Golden Visa is you buy a property. There's 10 different elements, but the main one is you buy a property above $500,000. There's some exemptions where you buy, but the main consideration here is that it was stopped by the government, the Portuguese government, in February. They're still reviewing this decision. It's not final, but it will likely stop, or they're going to have a lot of changes in the next few months. So if you're looking to come in a Golden Visa, you need to do it quite fast because you may lose the opportunity. But there could be other types of visas for you. So the D7 focus more on, you need to stay here 183 days minimum, and you need to show proof of the minimum salary in Portugal. As long as you have a passive income that matches the Portugal salary or minimum salary, you can apply for this visa. And it's, considering you coming from the UK where the salaries are much higher than Portugal, it's not usually a problem. D2 is if you are an entrepreneur establishing a business or establishing a company in Portugal, you can come in with a D2 as well. And if you are working remotely as a digital nomad, you could look for the D8. So depending on how you're going to be established here in Portugal, there's a different type of visa for you, okay? This process starts in the UK, and it takes around 2-3 months to get an approval. You do have 120 days to enter the country. So they give an extension on the 90 days. So instead of 90, they give you 120. So then you can then go to the local council to get your residency card. The whole process takes around 6 months. One thing we always recommend is, of course, if you need a removal quote, we work with a strategic partner called Algarve Removals that can help with this. And if you are buying a property and exchanging pounds into euros, use a forex dealer, and we recommend smart currency because they're very, very efficient. Okay, so let's look at the financial considerations. So as I mentioned before, look at the UK capital gains tax, especially if you're selling a property. When you're selling a property in UK, the CGT tends to be lower than in Portugal. So if Portugal is 28%, the UK is 10-20. So it may make sense to, if you have assets you want to sell in the UK before you become a Portuguese tax resident. Okay. Analyze your pensions. Depending on the type of pension, some may be acceptable or efficient here in Portugal, some may not. The main consideration when people have a private pension, company pension, and they haven't taken any benefits from it, is while the UK does allow for 25% tax-free lump sum, Portugal will not recognize this. So essentially, Portugal will look to tax your tax-free allowance. And that is kind of what you need to have really in consideration, because like other things, ISAs, PEPs, bonds, they're not compliant in Portugal. So your stocks and share ISA is gonna, if you move to Portugal with the stocks and shares ISA, for example, Portugal is gonna look to tax that at 28% capital gain. Okay? Of course, with all of this, with the right planning, there are things that you could do. For example, one of the options is restructure these investments into a Portuguese compliant wrapper. And you could do this before you become a Portuguese resident. So you could take benefit of the UK tax rules, all the allowances, and then move it into a Portuguese compliant wrapper. UK state pension, that is paid gross here in Portugal. It's paid gross and you pay tax only here, okay? And make sure you also have a UK will. And if you're moving to Portugal long term, also look to establish one here as well. Just important so we can match each other. NHR, not sure if you're familiar with NHR. Okay, NHR is an acronym for non-habitual residents. Even though it's the worst name they could choose for this, even though it's non-habitual residency, it kind of has nothing to do with residency. It's simply a tax status that you can apply if you're first-time tax resident in Portugal, or if you haven't been a tax resident in Portugal for 5 years and you haven't had an HR. Okay. What are the main benefits that this gives? If you have an HR, instead of have most of your income falling under the Portuguese marginal rates of tax, which are quite severe, your pension, if not taxed at source, if the UK could look to tax your pension at source, there are steps you can do to make sure your pension is paid gross. Your pension here in Portugal will be taxed only at 10% for 10 years. This is a tax status that gives you this benefit for 10 years. If you have foreign sourced dividends from a foreign country, okay, if that country has a double taxation agreement with Portugal, you can pay nothing, zero, exempt here in Portugal, as long as that country has a double taxation agreement that specifically specifies this. So the UK, for example. Rental income, capital gains on property, that's all subject in the UK, and in HR, there's nothing here to pay in Portugal. Royalty is the same. Okay. When it comes to work, if you're coming here to work, if you are self-employed or employed, okay, that you can benefit if your profession falls under a list of high-value activities and a whole long list. You can benefit from paying only 20% tax here in Portugal. Again, with the double taxation agreements, You don't pay tax twice, okay? It's just you're paying in one country or the other, but you just need to make sure the countries communicate with each other so there's no over tax being paid, okay? So moving forward with pensions, okay, so people especially here to retire, there's a few considerations you need to take. Like I mentioned, the PCLS, which is the tax-free lump sum, doesn't apply anymore if you're already a Portuguese tax resident. So if you have this to take, you could take, and because everything else is going to be taxed at 10%. And 10%, you probably heard this, before 2020 used to be zero, but now after 2020, it's 10%. There are some options when it comes to, they could benefit, depending on your personal circumstances. One thing is a QROPS, which is a qualified recognized overseas pension scheme. That is basically a European pension or international pension that kind of gets away from, or doesn't follow the UK rules, but has a few other benefits, like increased death benefits, that could maybe an option for you, especially if you have high value pensions. As you could may be aware, in the UK, they just recently removed the lifetime allowance. If you have a pension that is, if you had a pension that is closer to a million or above a million and 73, there's a 25% tax if you take income, or 55% tax if you take a lump sum. Like Europe's kind of does not have that, so it could be an option for you, okay? But again, an international SIP could also be an important, could be a solution, because it does have also other benefits, like a consolidation. If you have several pensions scattered around the place, international SIP could be a great place where you could combine and consolidate all these pensions. And when you take the payments, it could be just paid gross, and only 10% here in Portugal. So correct considerations should be taken before making the move, because it may be too late when you make the move, okay? So then arriving in Portugal, after you arrive in Portugal with your visa, we meet your professionals, who essentially is the people are going to help you here, whether it's a financial advisor, an accountant, a lawyer, just to make sure that you understand, especially the financial and tax rules, and what things you need to be making changes to maybe become more tax efficient, and take in consideration the application for an HR. So if you come, for example, in 2023, you have until 31st of March of the following year of your residency. So if you get residency this year, you have until March 2024 to apply for an HR. However, recommendation is that apply before this, so you don't, because you may get not approved at first, and then if you try to make an appeal after the 31st of March, you may not get accepted. So do this prior, well in advance, so you don't fall into any problems. As a Portuguese resident, you do have the right to SNS, which is the national health system, and you should also look into having your private health insurance. And just a joke, apply sunblock, because there's a lot of sunny days here, and very warm days. When it comes to financial considerations, here with the UK P85 form and the Form DT is essentially, if you're receiving income from a pension, you need to take in consideration the double taxation agreement, and these forms serve to tell the HMRC that you are resident in Portugal, no longer resident in the UK, and that you want to have the pension paid gross, for example, and no tax to be deducted, because most of the time the tax in UK is going to be higher and less in Portugal, and you don't want to then apply for tax credits. It's a lot of bureaucracy and a lot of more hassle for you. Consider, if you have investments, of course, consider the Portuguese compliant portfolio bonds, as it has several benefits. Look to restructure into this if you're looking to stay in Portugal long term, which also has the advantage that this system then is also compliant with the UK if you ever need to return to the UK. Driving license swap, of course, and it's not needed if you're under 60. If you are over 60, you need to make sure you take the right steps to make this change. But I think the most important here is the statutory residence test. Be careful with this because the UK has a lot of rules, and when it comes to residency tests, which look at the amount of days you also stay in the UK, and if you stay more than you should, the UK could consider you a UK tax resident, and you may fall under a dual tax residency, and it just kind of complicates things. So this is something, especially moving from the UK, taking in consideration, because depending on the amount of links you have with the UK, there's an amount of days that you can stay in the UK. Okay. Again, like I mentioned, having sort out the will, the power of attorney, and then also a car. If you're driving here, there's only a specific amount of time you could stay with the UK driver's UK license and plates, and you need to maybe make the change. So to summarize all of this, taking step by step. Step one, as you're leaving the UK, take the right steps to inform the UK that the HMRC especially, that you're leaving, and then establish your everything here in Portugal. Recommendation is it takes a lot of time. You need patience, especially with the Portuguese local systems, that it could take more time that is expected. And ideally get professionals, speak with the right advisors, speak with the right people that can help you do this process hassle-free, so you can relax, and it can be done properly, as a lot of time people look on the Facebook groups, look online, oh, this is quite easy to do, I'm going to do this, I'm going to do that, and then years later they do fall into a lot of problems, because even though Portugal is a great country, it does have its issues, and if you have the right person to help you, create a long-term relationship with, it just simplifies things, and you can then enjoy the beach and the sun and the food as much as you like. So I'll open the session for a few questions now. Again, I'll leave here my contact details. Following this, I'm sure I'll probably send you an email as well with my contacts if you need to get in touch. We do offer complimentary meetings, so you can ask your questions. During the first meeting, you can ask any questions you have. We'll try to answer most as we can, direct you to the right strategic partners that we have, so it can help you making the move.
Brilliant. Yeah. Thank you so much, Ricardo. That was very, very informative and enjoyable. So we do have a few questions. Please feel free, everyone, to drop a question in if you are also wondering about anything in particular. So Rob Archer has asked, how much is the minimum passive income?
Minimum passive income is around, for the main applicants, is the minimum salary in Portugal, which, if I'm not mistaken, is around 700 and something euros per month. So around, I can't really tell the exact number, but around 700 euros a month. And for the second applicant is half of that. So it's not much. And that passive income could be supported via a pension, as long as you can prove that income comes for at least 12 months, that's fine. Usually it could be a bit of an issue if you have a couple of investments here and there, but what you need to prove is that you can take that income that could support your life for the next 12 months, essentially. And then with the D7 visa, usually you have a review on that visa on the second year. So essentially you just need to keep proving that source of income could provide for your life here. The minimum is the salary is around 700 euros a month.
Great. Okay, thank you very much. Of course. And along with that, for a D7 visa, does the same apply for Canadians?
Yes, the same thing. So this process applies for people moving from countries that are not in Europe. So US, Canada, UK all follow the same process. So you need to get a visa before making the move.
Great. Okay, thanks a lot. Thank you, Rob, for your questions. James Sheldon has asked, what is the corruption factor, and should we budget for slipping the bureaucrats a little extra to get things done? Thank you.
Is that corruption? Is that the word?
Yes.
Oh, in Portugal. Oh, well, that's a tough question. I mean, I don't think you will feel much of that element. I mean, there is a little bit when it comes to in politics in Portugal. But I don't know how we don't see it really, especially as a foreigner coming in. You don't really have, it doesn't really have an implication. Where it does affect the local residents like myself is, the government, or the government strategies are a bit more towards bringing wealthy people into the country, so that's why they give a lot of these tax benefits. But the local Portuguese person really doesn't get a lot of benefits, unfortunately. And with the new elections, again, the left party won with the majority of the votes a few years ago. It's very difficult to predict what's going to happen this year. But the thing is, if you apply for an HR, for example, this year, even though if there's changes the following years, they won't apply to you. So for example, if someone applied for an HR prior to 2020 and their pension, for example, at 10%, they change the rule, but that doesn't implicate them. They have the benefits for 10 years. So whatever you do now, if they make changes in 2025, 26, it should not be relevant to you.
Sure. Thank you, James. And Kevin McCartney has asked, how long can I stay in Portugal with an Irish driving license and an Irish registered and an Irish taxed car?
Okay. So, I think the assets don't really matter. Just they're going to look at your basically passport. If you have an Irish passport, then you are inside the EU, so you do have freedom of movement. However, if you don't have an Irish nationality or passport, it's just 90 days. No matter if you have an Irish car or anything like that, it's not relevant. It's the nationality.
Brilliant. Okay, thank you. Roger Packen has asked, does spending 183 days plus in Portugal and the rest of the UK pose a tax issue?
So that's where you need to go to the statutory. Let me just go back to the slides. That's where the statutory residency test. So there's if you stay 183 days in Portugal, you are considered a tax resident here. Okay. Then, depending on the amount of links you have, and this is family, property, business, there's 5 different links. You can maintain a specific amount of days in the UK. If you breach, usually it's like 16, 45, 90, 120, depending on the amount of links. The more links you have, the less days you can stay. The less links, the more days you can stay. If you breach that allowance, basically, you will be considered a UK tax resident. Essentially, then you are a dual tax resident, and you have to then operate with both accountants in the UK and Portugal with a double taxation agreement to make sure that you don't fall into issues. But the one good thing is that you won't be paying tax twice. It's just going to be difficult from the UK side to communicate that you are not a UK resident, and they could look to tax you as well. Okay, so that's essentially the one thing to keep in consideration.
Sure, thank you, Ricardo. Mm-hmm. Eric Fullerton has asked, when would his rough timeline be to start the ball rolling if he's thinking about moving to Portugal in 2025?
I would say, I'll go back to the slide. I would say if there's a 6 months usually timetable on this. So, I mean, ideally, let's say January 2025 is when you want to begin moving. I would begin, January next year, 2024. Start choosing the right place to stay, looking on how the residency, getting the right, having a meeting with us, making sure I can tell you, okay, these are the steps you need to take, and then, start the process, the actual process, right steps, middle of 2024 exactly, so you can do everything and begin living in Portugal in 2025.
Sure. Okay, great. Cyril Teasdale has asked, can she start the D7 process without buying a property in Portugal?
Yeah, 12-month rental agreement works as well. So you don't have to buy a property. With the D7, you can just have a rental agreement.
Great, okay. Stuart Page has said, I have both an Irish and UK passport. I plan to move from the UK at the end of the year. What will be my status regarding using the health service?
Okay, with the health service, good question. Since you have both passports, you can use your Irish passport to begin the process, so make life a bit easier. As soon as you register as a Portuguese resident, you will have the right to to SNS, to the national health system, to the public system. It's not, how would I put this? It works, but it has its flaws, like most national health systems across the world. But you can then apply for private healthcare here as well. If you're talking about if you lose the benefit on your for NHS, for example, I'm not actually sure. I'll need to get back to you on that. It's not really my area of expertise, but I'll get you that answer.
Okay, thank you. Eric Fullerton has asked, what's the basic amount of money you need to put aside for fees if buying a property over 255,000?
Again, so if you're getting a loan, for example, the initial amount is around 15-20%, and then you need to add around, if it's 200,000, I would say probably 4%, 5% in fees. Yeah, around that. I mean, I have to calculate a bit more detail. It's kind of tough to tell exactly just from a rough number, but it just depends as well if you use a mortgage broker or if you use the bank for if you're getting a loan, for example. It just depends on a lot of things. On average, I would say keep in mind around 4 or 5%.
Sure. Okay, great. One last question we have time for. Could you give us a rough cost for your services offered and how it has arrived? For example, percentage, minimum amount, or number of consultations?
Okay, so our process is quite simple. So, excuse me, let me just open this again. So we do offer complimentary meetings, and we don't really charge a fee for our advice. Our meetings are served to me to prove that we can add a value and we can improve your situation, usually with financial planning, and if there's something that we can help you, for example, managing your investments or managing your pension, there's a fee on the assets that we will help manage. Okay, if we don't get to that stage, because our idea and our clients, we want to have a long-term relationship with our clients. So if, for example, you have meetings and they're all complimentary, and if you decide, look, there's nothing really I want to Chase could help me or you could help me with, and I just need help, for an accountant with a tax declaration, for example, there's no charge, there's no fee that we will charge you, because you're not our type of client that we want to create a long-term relationship. If, however, there is a specific asset that we can help you manage, there's a specific fee that we'll cover, but we'll be transparent. I mean, depends on a lot of things. I would put it on a range of 1%, for example. But that's the idea. And again, where we usually find a lot of benefit, 95% of the time, we're able to provide such a good value to our clients and prospect clients that they then refer us to other clients. We don't force anyone, but they willingly refer to other clients because they got such a good value, even if they don't become our actual clients. It's just something that we help them guide them towards the right person to speak.
Great. Okay. One last question, if that's all right, Ricardo.
Yeah, no.
Brilliant.
No problem.
Thanks, Andrew, for this. So what are the rules around the D8 visa? I work through my UK limited company. I pay myself and my partner a low salary, and we then receive dividends from the company. My partner has dual nationality, Brazilian and Italian. Would I be better applying for a visa as a family reunification or a D8 digital nomad visa independently?
Oh, you're giving me the tough questions in the end. Ideally, again, without knowing a lot of more, I probably need more details, but again, this is just an idea from what the question, just on information on the question. The family reunification would be better, okay? Because with the D8 visa, the requirements of salary is a bit higher. I can't exactly tell you the amount, but it's a bit higher than the D7, or quite higher. It's around 2,000 something a month. So if you cannot make that that salary, essentially, the family reunification will be the way to go because it simplifies things. Okay, so for your case, for example, that's a very good question, and that's where we would sit with you, and look to give you some proper answers. With the actual plan, give you the kind of roadmap of you should follow this step because it has disadvantages, facilitates your life, rather than this because it has this kind of cons that will make your life difficult, or the other way around.
Great. Okay, well, that's about all we have time today in today's session. So thank you so much, Ricardo. You've been very, very informative. And yeah, that's been great to hear about your knowledge. Thank you to all you listeners for joining us. So yeah, we strongly recommend you to get in touch with Jace Buchanan directly to discuss your requirements in detail. So you'll receive their contact details shortly, and this webinar will be available on demand soon. So thank you so much again, and happy property hunting.
Exactly. Good luck.
Thank you. Bye.
Bye.